Welcome back to Capital Ideas, where we celebrate the innovators and disruptors in the capital markets that make their ideas come to fruition. I'm Nick Morgan, the co-founder of ICANN, Investor Choice Advocates Network, and the co-host for today's podcast.
And I'm Dara Albright. I am the co-host of Capital Ideas and a proud board member of ICANN. And today with us is Jim Rao. Jim is the founder and managing partner of Entoro, a technology-enabled investment bank and advisory group that specializes in alternative assets. And I think, Jim, before we jump into the questions, I noticed your screen in the background there shows Capturiant. So maybe you could give a little intro to that and yourself.
I would be happy to. Thanks for having me on, Dara and Nick. Let me start off with Entoro. So you're correct. That's the majority of my activity. And that is we're a broker dealer, commodity pool operator, 3 or 4 other regulated entities, as well as we have our own tech stack. We actually had one of the first 506c offering platforms back, starting around 2015-16. So been in the alts world, been in the RegA CF space for quite some time. Capturiant is a little different, given our DNA in the regulated world and having multiple licenses, etc. Capturiant is a engineered solutions, carbon credit exchanger for most people, and environmental assets exchange. So we do water rights and carbon credits and these types of things. And since we're based in Houston, we focus on a lot of the engineered activities, so oil and gas projects that need environmental carbon credits, et cetera. So that's what this business is. And in fact, we formed an exchange and got a license in the Bahamas to do digital asset registry exchange. We jokingly always laugh because we got FTX's license. So when they fell away, stepped away, whatever you would like, we actually ended up with that license for environmental assets. But we never pursued it because regulatory issues and everything else, not global, but mostly U.S. keeping handcuffs and real hindrance on a lot of activities that people could really work on, and could be a lot better risk management out there if we had, greater friends or better friends in regulatory aspects.
Yeah, well, I know we're going to jump into some of those regulatory questions in a bit, but maybe you could also start by talking a little bit about how difficult or challenging that it's been for alternative asset issuers to raise capital.
It's kind of a combination of things. So I don't know, point the finger is the right way to say it, but in my mind, good regulation is fine. Too much regulation is stifling and kills all innovation and all really activity. And that's what we have in the United States. We have over regulation. We're overburdened. SEC as far as crypto, FINRA with the rules and regulations that are so anti-competitive, anti-American, anti-everything. It's really very, very difficult for anyone to be innovative and create and try to find new products that would be very interesting. I mean, look at things just very simple. Tokenized shares. Like we did one of the first STOs in the U.S. in 2017, and what was I awarded with? I was awarded with 27 interrogatories and 18 months worth of hassles from FINRA, when all it was a very simple, RegD offering for a project that wanted to put its cap table in a wallet and have it on a digital registry. What was so wrong with that, right? And it just was a real burden. It cost me hundreds of thousands of dollars to have a lawyer tell him I didn't do anything wrong. So a lot of people are afraid just to be innovative and be creative, and really it hurts the broker-dealer community, hurts all of the financial side, but really the person it hurts is a little guy, because his choices are limited in what he or she can get into or interest in. And then, also to add it a little bit further, look at the rules around accreditation. I know a lot of people that are pretty wealthy, but the guy that makes a lot less than they are, that's considered non-accredited, knows a hell of a lot more, probably does more research, and given the resources that you have online, there's what should we do about that? To me, it should be, either you sign off or there's a test base or something besides just saying, oh, you're not, because you don't make, a certain amount of money or your family doesn't make a certain amount of money, that makes you stupid. I find that, I mean, why should I be restricted as a smaller investor, being able to take on some of the opportunities that the big boys have?
Yeah, I mean, it seems unconstitutional, if you ask me.
I'm
But
with you.
And it's a recurring theme on this program for sure.
exactly. And just to touch on your point about just the regulations and over regulations, I mean, and I think Nick has has heard me say this before, but when Intel went public in 1971, the entire prospectus was about 38 pages. When you look now, I mean, we do a comparison. I did this comparison years ago to Alibaba. When Alibaba went public, it was over 300 and something pages was the prospectus, and 39 pages alone was just risk factors. So you look at all of that. It's no wonder how expensive it is now for companies to, it's no wonder companies are staying private longer.
There's very little incentives for most of them to go public.
Yep.
And the other note there, Dara, is that look at the stock of stock. Since, I don't know, Nick, maybe you help me out, since 1980, the actual number of or percentage or capability or the amount of actually public companies is a third of what it was in the equivalent kind of balance between public and private, and also from a total market capitalization. So to me, that's actually led to additional risk factors in the overall market, because what happens is that there's so many good transactions in the private side. Most people like me, I'd prefer to stay on the private side. But if you have a shrinking amount of stock, but you have continual, pension funds and everything that are obligated to put so much money and a percentage of their retirement funds and foundations and everything they have to buy public companies for the liquidity. All you're doing is buying and buying and buying, and at some point your PE ratios are way out of whack, and I could argue they're a little out of whack right now, but that's for debate. But to me, it builds in systematic risk, and is that really the best interest? Not only that, but why is it so difficult to go to the capital markets? In an age of the internet, you can get research, AI, you can find out anything in a matter of 10 or 15 minutes worth of due diligence. Why do we need to make it so tough?
Yeah.
It's just unnecessary. And in my mind, it goes back to jobs. And it's not the jobs who you think it is. It's the regulators' job is to keep their job. So they make things purposely difficult, because they can always say, oh, we're protecting the public. Well, that's the biggest cop-out on the planet, right? Really, you're there just to drag your feet and to make sure you have a job.
Yeah, and I'll say so. I actually did some research on that. There were a little over 7,000 companies at the peak in the 1990s, and 7,000 public companies. And today there may be, around 4,000. So, where there was significant drop off. And if you think about how that affects a portfolio and diversification, you think about it's not only the equities that people can invest in. The selection is getting smaller and smaller, but all the byproducts that come out of all of those, the bonds, everything else is so that you're not getting any kind of diversification, because basically, even if you're invested in stocks and bonds and mutual funds, it's all derivatives of that same 4,000 public company.
Does anybody remember 2008? Does anybody remember 1999? Does anybody remember 1987? These have recurring themes if you're a historian here, and all we're doing is building up. But I would even say it's worse than that, Dara. I'd say that of those plus or minus 4,000 stock, is that there's only really 100, maybe 200 of them that are really 90% of the market. if you wanted a positive regulatory function that no one talks about, is why do we have all this garbage pink sheet stuff? Why do we have, if something's been inactive or, they should automatically be delisted. I mean, there should be beyond just on the New York Stock Exchange and stuff being, you need a certain volume and dollar price. But a lot of these things that just become zombies, they should be they should be, delisted, or, they should go away. I mean, if they're a private company now, that's how I look at it. If you want to really they should get rid of 1,500, 2,000 of those companies because they're just worthless, right? They just need a reason to go bankrupt at this point.
Jim, you mentioned in passing, I think you were tying the notion of more regulation creating a greater systemic risk, which I think Dara and I would totally agree with. But can you talk a little bit more about what you meant by that? Because the usual narrative we hear all the time is we're going to create more regulation to enhance systemic stability, which obviously you're shaking your head, so we're obviously in agreement on that. But what did you mean by that when you said regulation could actually do more?
Look, no one minds rules, right? You probably played basketball or soccer or football when you were younger. And you had rules, right? If you scored touchdowns, no one minds that. But if you started layering on all kinds of rules onto a sports team, it would just not function. And that's where we are, in my mind, today. And compared vis-a-vis, I have the opportunity, I guess, and the blessing that I work internationally, and I have the ability to compare and contrast between the U.S. system and others. And I can tell you, the SEC and FINRA claim, oh, we have the most liquid market. Yeah, okay, that's great. But that doesn't mean you need to, strap on boat anchors to entrepreneurs and people that want to go public and disclose stuff. And I mean, the rules are all there now. I mean, we've been programmed for the last 30, 40 years, due diligence and all the kinds of functions that are out there that you're not really going to be, let the buyer beware, right? Quit trying to, the nanny state needs to go away in this category. There's still risk, right? When you sign a subscription agreement as a private placement, you're saying you've read it and you understand the risk that you could lose your money. Okay, we got to quit protecting the 100% of the downside. That's just irrational. But what do I mean is that you keep concentrating, so you're keeping people out. And it was back to my pension money. So think about the teachers unions, the New York City teachers or CalPERS or any of these other big pension funds, et cetera. They have a shrinking pool because people aren't. It takes so long to get a project to market. Think about how long it takes to de-SPAC. Think about how long it takes to do an S1. Think about how long it does to simple RegA plus. You go to 4 to 6 months for a small company to do a RegA. The whole system is wrong. It should be inverted. It should be, from a regulatory standpoint, everything should be a yes and have timelines, forcing the regulators to say it is either good or not good on a certain time period, be it 30 days from your filing your S1, you have initial approval, right? It shouldn't be what do you call it, Napoleonic law. Last time I checked in the United States, you're a lawyer. To me, don't we go by case law? Or don't we go by the English method? Why is it in the regulatory world, it's no, 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 then yes. It should be yes, 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 no. So, and if it is a no, then you have a certain number of days or weeks or whatever it is to rectify the situation that they may have a problem with. It would transform the entire system massively overnight. I don't want to deviate too much from the securities world, but it's the same thing when you have a drug trial. Why do most people now go and do Europe or India drug trials and avoid those 15 years of trying to get a drug on registered or
Right.
able to go to market? Same thing. We go about it. I'm not saying you skip on it, but just have it so it's in a different mindset. It should be yes. I mean, you look at some of the jurisdictions around the world. It's much more, if you look at it, the Singaporeans and others, they're very much more of yes, how does it work? And they're also much more collaborative. Okay. In the United States, the regulators rule by enforcement, not by, you can actually call FINRA and the SEC, and most of the time they'll say, I don't know, you figure it out.
That's right.
I'm trying to ask the regulator for some guidance here. Why wouldn't you give me some signal? Oh, we can't do that. That's illegal. And oh, it's not our scope. well, maybe we need a different regulatory system, or none at all. I don't know. What do we need? But it's not working right now.
Well,
Well,
they don't want to make it easy for you. They basically want you to fail so that they could fine you. So,
well,
Yeah, well, yeah. I mean, if the SEC is different, actually, they're for the most part professionals, right? It's only you get only the senior guys that want to, think they're going to run for another job or whatever. They're doing Gensler, right? He just had a burr, under his saddle about, crypto, and he just wanted to be, BMOC, and that is that regulation? No. So what killed me is that there was one crypto, and I can't remember the name of it. They actually settled a lawsuit on Tuesday with the SEC, and then the SEC turns around and sues them on Wednesday.
right, right.
I'm like,
Yeah,
well, WTF?
yeah.
What's this? Right? I mean, beyond being disingenuous, how about all the money these guys spend, and they're spending it on legal fees, okay, just so these guys can walk around and pretend that they actually have something to say. Well, I would say most of them, you actually get into the bowels of FINRA and the SEC. Most of them don't know the basics of securities. They don't know the basics of the rule. I'm not saying everybody's, and by the way, they're good people in both organizations. I'm just saying, as an overall thing, we need to. This is wrong with the way we're working this thing. Not everyone's evil, but there's more evil than good. But the real issue is how do we break these barriers down, and how do we get to the capital markets so they can actually start working for U.S. citizens, the voters, taxpayers, the people that actually want to invest. You keep putting all these hindrances on, people aren't going to get the returns they need for retirement. They aren't going to get the returns to funds to pay their kids' college tuition, to hopefully buy a boat or live a better life. Last time I checked, we still have American exceptionalism here, and let's do our best to try to keep that going.
So let me pivot for 1 minute because I agree with everything you just said. But despite all that, Jim, you are in as you said, a regulated space, heavily regulated, in multiple regulated spaces. And one of the things Dara and I appreciate is that the Entoro group of companies actually, despite all those barriers, despite all those regulations, helps to enable better access to the capital markets and other markets. How does Entoro, broadly speaking, do that? What are the ways that it helps broaden access to the capital markets?
So but there's a number of good question, Nick. But if you look at it, there's everything from we have the I guess the benefit or the luxury to actually have investment banking, and then we actually have the broker dealer, and we're a commodity pool operator. We have other so we're able to assist and match up what is actually the right way to do something. And the majority of our team too is focus, on certain industry sectors that have that. And then, like I said, when we did, we have a company called Offerboard, and it was, like I said, one of the first 506C offering platforms where you could actually start to go and put that out there. The SEC was very positive to it, and FINRA is just trying to figure out how you're going to rip off somebody. It's like, why don't you ask me the questions on how it works and how it works well, instead of, now most people are used to buying things online, but a few years ago you couldn't. People struggled with it, and a lot of people struggled the first time they used Uber too, right? But I think we need to continue to evolve. We have the technology to be very good, but how do we help? I mean, we have the advisory side. We do Reg A's, we do Reg CFs, and Reg D. So we do all the exemptions, but and one size doesn't fit all, and there's so many factors that go into the sector you're in, the how much money you have, what stage of the company you are. And the biggest one that drives most thing, and people don't appreciate and understand this, is that 60% of the success or failure of a securities offering is the sponsor. Been proven many, many times. Every study, goes back to who the sponsor is. And that doesn't mean it's necessarily someone large. It is the makeup of the group, it's the experience, or whatever those factors are. Because you can take a bad project with a good management team and make a success. You cannot take a good product and a bad management team and be successful. Never worked.
Dara, shall we leave it there?
Yeah, that was a great point. I like that.
I think so too. I mean, it sounds to me like one of the ways, if I can paraphrase what you just said, Jim, one of the ways that your group of companies addresses the regulatory barriers is by having multiple tools available so that you can find someone comes to you, the right tool to fit the need of the situation.
I would, maybe if I could restate it, I would also say, look, the regulators try to, first of all, you're perceived and assumed to be guilty of everything. That's a fundamental flaw. 99% of this industry are good people, great people. They want to see success. Guess what? They get paid by something successful happening, most of them, right? Why would we want to hinder that, right? So why the burden? Why the damn burden? We should all be trying to figure out how to increase the capital markets, how to increase. I mean, if you're a regulator, you shouldn't be paid on, how many deals you kill. You should be paid on how many you get done.
Wow, right there. Put that on a bumper sticker. I think I'd put it on the car. Well, Jim, thanks very much for coming on. This is, we could listen to you for, I think, hours and not run out of interesting topics to hear, but maybe we'll leave it there for this episode. And so thank you for coming on, Jim. Dara, as always, thank you for co-hosting. And for everyone else, please tune in for the next Capital Ideas. And if you want more information about ICANN, go to icanlaw.org. Thank you.